Good morning, I'm Tim Carter. I'm a client portfolio manager on npower's optimisation desk. Welcome to this morning's market update on Wednesday the 5th of August. So we've seen prices nudge lower again for a third successive day this week. The key price drivers are really the same as they have been. Number one, we've got an oversupplied UK gas system today, around about 20 MCM length. Number two, the GBP pound sterling has strengthened against the euro to pressure those prices on the gas curve. And finally, number three, oil markets have steadied but maintain their low levels just above $50 per barrel. Those are your main headlines. If you've got any questions, please contact us on the email address provided. Otherwise, please continue to watch for a bit more detail. So looking at the UK gas fundamentals to start with, we've seen, as I say, line pack forecasts at the moment currently around 19 MCM long. This comes despite around about a 10 MCM pickup in demand from seasonal normal levels, as we've seen through the start of the week. That's in response to slightly lower temperatures and also lower renewable power generation, so there's a higher demand on CCGT gas demand today. However, the key reason for this length still maintained is because of what we think ahead of the Troll maintenance scheduled for Friday, which should cut Langolid flows to the UK to zero. Well, today Langolid is actually nominating up at 46 MCM. That's around about 6 MCM more than the previous couple of days. So that's adding to the supply picture. Elsewhere, IUK exports are pretty much flat, along with LNG send out, despite that extra tanker coming in yesterday. Also, we've got storage injections pretty much flat with where they've been through the week, around about net 17 MCM for injection. But we have seen an announcement from Centrica that Rough will move to single train injection over the weekend. That had been scheduled for maybe yesterday or today, but has been pushed back a little bit. So what that will do is just maintain some of the gas demand through this working week. Moving on to the kind of FX markets, following a small dip early yesterday for the pound sterling because of some poor construction PMI data, we've seen that recover to nearly where it was the highs in early July. So £1 is now worth 1.43 euros. So that will be obviously pressuring a lot of the import gas prices from the continent, as well as deterring some of the export from the UK to the continent. We've got some more PMI data out today, service industry today, that's across Europe, so that might provide some further direction for that currency pairing. Finally, in the oil markets, as I said, just trading around $50.5 per barrel, a little bit off the lows that we saw earlier in the week. That comes as there's a bit of a support because we've seen the API data for US inventories come out yesterday evening. That's signalling a 2.4 million barrel withdrawal, but that might be creating some speculative length in the oil markets ahead of the official EIA data due out at 3:30 this afternoon. That's currently forecast at around about 1.3 million barrel drawdown. That's it for today. As always, if you've got any questions, please contact us. Otherwise, have a great day.